Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Podcast, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Well, let's take a look at some stocks on the move today in Europe. I'm Valerie Teitel with Caroline Hepker. We're joined by Bloomberg's equities reporter, Chloe Mele. Chloe, let's start here in the UK with AstraZeneca posting some strong earnings.
Yeah, absolutely. Good. Quite a strong second quarter set of results this morning. So we've got better than expected sales and rising profit in the second quarter. That's due to kind of two main things. So first of all, a real focus on cancer medicines. So that's a bet that the CEO Pascal Soriot has made, and it's really paying off. And then also a really strong focus on the US. So you'll remember that very recently AstraZeneca announced a plan to invest as much as $50 billion in the US by 2030 for manufacturing and for research and development. So this focus on the US and this focus on oncology is really working well for AstraZeneca. If we look at kind of catalysts going forward, a lot actually hinges on a potential blockbuster breast cancer drug called Datroway. But Astra said that it was pushing back the results of that study on that drug to next year rather than this year. So it was supposed to come out this year. So investors will be really keeping a close eye on this, and that will be key for the share performance because AstraZeneca, despite those strong results, has been underperforming some of its peers like Novartis in Switzerland, for example. So we'll be keeping an eye on that going forward as well.
Yeah, absolutely. I mean, Astra's $50 billion manufacturing investment in the US is significant. The UK lost out on some investment too. That was a few months ago, but, you know, that's very significant. Philips this morning soaring. Why?
Yeah, so Philips, it's a really interesting reversal from Philips. So it actually raised its profitability outlook, and that's just a couple of months after actually cutting it. So it said it cut its outlook in May. That was due to the tariff impact, to the impact of the trade war. But then today it said that the impact of that trade war was actually not as bad as it originally feared. So it raised it again. So it's kind of a quick turnaround if you think about the fact that it's over the course of just 2 months that it kind of digested that impact and raised that outlook again. At the time in May, had estimated a hit of as much as 300 million euros. Now it sees an impact of just 200 million. So it's quite a significant drop there. This really provided kind of a relief to the shares. They have been struggling over the last year or so. That was due to the trade war, which obviously the worries there are lifting a little bit, especially with the new trade deal, but then also weakness in China, and that is still continuing, however.
Yeah, so shares of Philips jumping more than 10%, one of the best performing stocks in Europe this morning. Very quickly on Stellantis, a bit of a different picture there when it comes to their tariff warning.
Yeah, absolutely. So they are estimating a 1.2 billion euro hit from tariffs in the second half of the year. They also lowered the guidance for operating margin. They see low single digit. They had seen mid single digit. That's obviously off the back of the pre-release that they had last week, where they announced that 2.3 billion euro loss. And this full set of earnings really did not reassure investors, and we are expecting more and more of that tariff uncertainty weighing on Stellantis and on the wider maybe car making sector as well, despite that trade deal.
The Stock Movers Podcast from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.